Okay, you are welcome. I hope you can hear me. All right. As we continue talking about smart money concepts, today we'll be looking at multiple or one time frame. The part one. Many people always talk about this type of thing. Some call it top to down analysis. That's from checking from one higher time frame to the lower time frame to another time frame to another time frame, looking for price action that will meet their requirement to trade. Okay, now what are the problems and what are the solutions? The problems are probably the questions that people usually ask. You see, the question that is prevalent in the community, in the trading community, is usually one: what is the best time frame to trade? Which time frame will give higher probability of price playing out as anticipated? Then number three, and how many time frame combination is best to have great trading edge? People want to know all of this, and so many other questions regarding to time frames, but I'm going to just answer three of the most important ones. You see, the first question says, what is the best time frame to trade? Basically, there may be nothing such as best time frame, as people will be searching for it on YouTube, on Google, just looking for what is the best time frame to trade. There's basically no such thing as best time frame to trade, although recommendations can be made from experienced traders. People that have been trading, they can tell you their experiences with some particular time frame, use this time frame to trade, all of that. You will see improvement in your trading. Okay, they are talking from experience. Then number two question says, which time frame or time frames will give higher probability of price playing out as anticipated? People don't just want to know what is the best time frame. They also want to know which of the time frame that is even the best that can give out great winning opportunity. You see, all time frames that a trader can work with can give higher probability. The most important thing is that it depends on how effective it depends on how effective the trading system employed is, and on the choosing time frame. There are some pairs or there are some trading strategies that work with a particular time frame effectively, so you have to choose which one is best for your trading system that you can easily implement. Then number three question is, and how many time frame combinations is best to have a great trading edge? And other questions as such. People say, okay, you cannot use one time frame to trade, you cannot do this, you cannot do that, you cannot just use daily time frame to trade entry, just enter the trade like that. Some believe in top to down analysis. You have to check monthly time frame, weekly time frame, daily time frame, 4-hour time frame, and all of those many things. You see, this also depends on the trading system and preference of the trader. You see, somebody that is working 9 to 5, as they usually call it, somebody that has a job that is working, you cannot expect such a person to be on the chart 247, or to be on the chart from morning till afternoon, then from afternoon to night, all of that. Everybody with the way they prefer to trade. Some, they want just to trade, okay, before they go to work, their 9 to 5 job. They want to trade and look for, entering the market. While some people, they don't even have such time at all. They are not even considering trading. While those that has even considered trading, that are still doing their job, probably they want to work after they come back from work, and they want to look at the chart after they come back from work. So it all depends on which one the trader is comfortable with, probably because of their job or because that is just what they can easily relate to. Okay, some prefer to use only one time frame as it suits their trading system. I'm also talking about trading system, your trading strategy, what you know that yes, anytime you apply this type of strategy on this particular time frame, it always give you high probability of winning. You see, that is how it is. But some expert traders recommend to have basically 2 to 3 time frames, and they segment it as saying, okay, if you are going to do top to down analysis, you are going to have, first of all, major time frame, then you are going to have medium time frame, which is also known as lower time frame. And this lower time frame also we can also use it for entry, okay, depending on if it meets your trading system or your trading strategy. Then we have the last one called entry time frame, okay, entry time frame. And that is how you can easily apply this principle, the understanding of top to down analysis. The questions, I've tried my best to answer the little I know, okay. There's something like best trading time frame is just the one that suits you, you see. And there's no particular time frame that can also give you higher probability of winning. It's just the one that suits you also, and the one that suits your trading system, the way you trade, your strategy, the one that suits it, okay. Then when you talk about which time frame, that's question number 3. How many time frame combinations? Because people know that, yes, when you analyze from top to down, you know where you are in the market, you can easily move along with the big players. They want to know how many of those time frames do you have to check to be able to say, yes, I'm riding with the major trend, okay. So they are basically 3. A lot of people use a lot of more than 7 time frame just to enter one trade that even the playing out of that trade is all about 50-50. Everything is all about probability. So some people are trying to cheat the system by looking for like 7 to 10 time frames to trade, okay. So I'm going to analyze all of that to ensure that, to prevent confusion in the next part, so that when you see the time frames, you understand where they are coming from and how you can easily make use of them for less confusion and for higher probability of winning your trade. Thank you, as we go into part 2 of this series.